Hello everybody, welcome back to my channel, Trading Secrets. This channel is for entertainment purposes only, and for those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law, and through this channel I'll be providing some stock analysis and also a short trading lesson at the end, so please stay tuned. In the previous video we did a stock update for ticker symbol LKCO, Lucon Technology, so please refer back to that in terms of breaking news and updates for the stock. In today's video, I'll be looking at 3 new penny stocks to put on your watch list for this week, and the first one is ticker symbol MOTS, Motus GI Holdings Incorporated. This is a stock that's trading on the NASDAQ, so let's start by having a look at the 5-day chart. So if we start by having a look at the 5-day chart here on the screen, we can see over the previous 5 days of trading at time of filming, this stock was up in excess of 11.53% at $1.15. So this trades on the NASDAQ on the ticker symbol MOTS, Motus GI Holdings, and we can see its momentum has kind of started upwards around about the 3rd of June. So let's now have a look at the stock from a 6-month chart point of view. So if you have a look at the screen here, let's have a look at the 6-month chart. The 6-month chart here, we can see again, similar to many clean energy and penny stocks and EV stocks, we can see this stock also achieved an all-time high over the previous 6 months in February, and this was at $2.46. Similar to the other stocks, this has followed the general momentum downwards. And we can see, however, over the previous 6 months, this stock is still up in excess of 3.6%. However, it seems the share price seems to have stabilized, and there could be some momentum going forward that is positive. So let's have a look at details about this company. So we're going to start by having a look at the website, Motus website, and we can see the key headline here. This is a company that is developing breakthrough solutions for endoscopy. And the headline here is Motus GI is a medical technology company dedicated to improving clinical outcomes and enhancing the cost efficiency of colonoscopy. So let's have a look at what else we can see on this website. What I've now done is gone to the investor relations page and looked at the latest press release, and I can see here there is possibly a good catalyst going forward here in terms of the date of this article, which is June 3rd, 2021. So let's have a look at the details of this article. So the article here is Motus GI announces publication of Pure VU trademark name there, system clinical data in peer-reviewed journal BMC Gastroenterology. Excuse my pronunciation there. So let's have a look at what this means in terms of a summary from this article. So quotation there in terms of the article, I'll just read that out for you. A multi-center prospect inpatient feasibility study to evaluate the use of intracolonoscopy cleansing device to optimize colon preparation in hospitalized patients. The reduced study in the peer-reviewed journal. Among the important findings that the company continues to emphasize since the data from the reduced study were first announced in the PureView system's 97% clinical success rate. So that's the key thing I want to focus on, which is the 97% clinical success rate. So what this indicates to me is that this research that they are carrying out has got huge potential in terms of FDA approval going forward. This could be a huge catalyst in terms of success and also revenue generation, and that is also has been reflected in the share price, which is now certainly seems to be building up a little bit of momentum. So what we're going to do now is have a look at a possible entry price and a strike price for this stock. Okay, so in terms of entry price for this stock, it closed the play on the Friday at time of filming. This was trading at $1.15. We can certainly see it has been does seem to have support around the $1 mark. Momentum has been good. However, after a pullback, if you can catch this play again close to the $1 mark going forward, I certainly think that will be an excellent entry point. The next stock I'd like to bring you is Polarian Imaging, ticker symbol POLX. This is a stock that trades on the London Stock Exchange, and the close of play at the time of filming on the Friday, this closed at 94.09%, which was up at just in excess of 3.4% over the previous week. So let's now have a look at the 6-month chart for this stock. Looking now at the 6-month chart, we can see that this share price has gone up in excess of 17.8% over the previous 6 months, which is very healthy. From the momentum in terms of February, we can see again, compared to many of the EV stocks and the penny stock, this stock has actually gone up from the February problems that we had in the market, and it's now certainly seems to be showing some good momentum, certainly from May onwards. So close of play on the Friday at time of filming, 94.09%, and the momentum does seem to be quite strong for this stock. What I'd like to do now is share with you details about the company, what they're about. So let's head over to the company website and look at the profile. So what we can see here in terms of the top paragraph there, we can see that Polarian is a clinical stage company with a core technology that is drug device combination product, enabling visualization using MRI technology to help diagnose lung disease earlier. So very, very important there. And in terms of a possible catalyst, what I can see here on this page, it is currently being used at a number of research sites on a pre-FDA clearance basis to facilitate the research and evaluation of lung function, to assist in making improved disease progression assessment, and to clearly visualize the effectiveness of several therapeutics which are under development. So the important thing I'd like to draw your attention there is where it says pre-FDA clearance. So that is something important as investors, because at the moment it's pre-FDA clearance. The signs are looking strong. Once that FDA clearance has happened, then that is certainly going to be a huge positive catalyst for this stock. The second thing I'd like to share with you on the company website is another headline here, which I think is certainly important for our stock going forward. So the headline here is NDA Submission for Polarian's hyperpolarized xenon gas drug device diagnostic for lung imaging. So let's have a look at the details of why this is important for the stock price. So the medical imaging company with an investigational drug device combination product for magnetic resonance imaging, in terms of MRI, announces its submission of a new drug application and request for priority review to the US Food and Drug Administration, which is the FDA, for hyperpolarized xenon gas used to evaluate pulmonary function to visualize the lung using MRI. So again, that's very important. And the second paragraph I'd like to draw your attention to now is basically saying the submission of the NDA follows the company's successful completion of 2 phase 3 clinical trials. So again, very important there. What that tells me is the 2 successful phase 3 trials basically means the company is very, very close to revenue generation. They're just looking for that FDA agreement now. Once that happens, again, a possible good future catalyst for this stock. So let's finish off now by looking at possible strike price for Polarian Imaging. So one thing I'd like to make you aware of, although this company is based in North Carolina, United States, the stock ticker symbol GBX is actually trading on the London Stock Exchange. So the strike price will be based on pence. So in terms of going forward right now, it is still volatile stock. It's still a penny stock. In terms of right now, trading at 94.09, going forward, I think the momentum is strong. So certainly with a pullback, if you can catch this anywhere around 85 pence, that would be a good entry point. The final penny stock I'd like to share with you is a stock that I think is not on the radar of almost all analysts and investors, and certainly most YouTubers, and this is a stock called Shanta Gold Limited, ticker symbol SHG. This is a stock that has been trading on the London Stock Exchange, and we can see here, let's start by having a look at the 5-day chart. We can see over the previous 5 days this was down at time of filming just in excess of 1.82% at 16.2 pence. So let's now just have a look at the 6 months chart. Okay, so if we have a look at the 6 months chart here, we can see over the previous 6 months, Shanta Gold has gone up just in excess of 9.83% at 16.2 pence at time of filming. So let's just have a quick summary of the profile on the right hand side on the screen there, which I'll summarize for you. So Shanta Gold is a mining company It's registered in Guernsey in the Channel Islands, but it actually operates in Tanzania. The company is listed on the LSE with a market cap of around £63.5 million as at 18th of September 2013. So certainly it is a small company. It is a penny stock, but I think it's got huge potential in terms of the future, and there is some possible catalyst coming forward that I'd like to share with you. So before I share with you a potential catalyst for this stock, let's have a look at further details about the company on the About Us page. So in terms of Shanta Gold, what they have said here is the new Luika gold mine is 100% owned. It's a low-cost established cash generative operation boasting high-grade resources rarely found around the world. So Shanta is focused on delivering maximized sustainable value for shareholders from this mine and other assets in the portfolio through meticulous expert management throughout the business. So the company, obviously we can see here, is involved in gold mining. As far as I'm aware, over the long term, I've never really experienced the price of gold going down. I think the price of gold has always gone up over the years. It's you could say the overall momentum is similar to Bitcoin, where it may, even though it may go down temporarily, it's always recovered and gone up. So let's carry on with the article. Alongside the new Luika, Shanta owns Singida, an exploration and development stage project located in central Tanzania. A portion of the Singida asset is held in a joint venture of which Shanta has a 90% interest. So what that tells me is the company is strong in terms of assets, which gives it a good solid valuation from that point of view. What I would also say is it's still a small company. It is a penny stock. And third paragraph there, we can see they're involved in exploration, because obviously in terms of gold, this is an important aspect of the business operation. So they're looking at an area in excess of 1,560 kilometers squared, looking at ex-colonial mining areas of the geology-rich Lupa goldfield surrounding New Luika, as well as a 12-kilometer squared prospecting licensing in terms of southwest Tanzania. So what I'm going to now do is share with you a potential catalyst for this stock. Okay, so the article I'd like to share with you is an article by Katie Pilbeam. The headline here is that Shanta Gold reveals bonanza, inverted commas, results from the West Kenya project, which are hugely valuable, again inverted commas. So let's have a look at a little bit of this the details about this article. So Shanta Gold joins Proactive London about their incredible results, which confirm the West Kenya project is hugely valuable for us. So why is it valuable? So this is explained in the second sentence at the bottom. Visible gold was identified in 7 different intersections as part of an 11-hole drilling program on the West Kenya project. So let's have a look at what this could mean. What this article is basically doing is giving me a clue in terms of a potential catalyst for the future. Obviously this statement here that gold was identified in 7 different intersections. In the long term, what that basically means is once the company has completed this drilling and extracted samples, if it can confirm that this gold is in there, is in substantial significant supply, then that could be a huge catalyst for the stock. So it's something that has not yet happened. In terms of benefiting from that, obviously if you are in the stock and have invested and the company does give results from this West Kenya project, which are positive, then that will be a huge catalyst for the stock. So let's now have a look at a possible strike price. So in terms of potential strike price for Shanta Gold, ticker symbol SHG, trading on the London Stock Exchange. Again, at time of filming, it was priced at 16.20 pence. If you can certainly catch this with a pullback anywhere below 15 pence, I think that would be an excellent entry point going forward. Again, with this being a small business, with this being a penny stock and high risk, because certainly although results can be positive for drilling exploration, they can also be negative. So if they are negative, the results are not great, then obviously the share price can nosedive downwards as well, leading to substantial losses. So please use any potential stop loss and also invest money you're prepared to lose. But if you consider the risk is worth an investment, then a price just below 15 pence would certainly be good for the long term as well. So Shanta Gold, this is also another stock I'd like you to put on your watch list for this week. It's now time for lesson of the day. We're going to continue with our series on chart analysis, and today we're going to look at the head and shoulders. So this is obviously looking at chart analysis with also combining it with strategy. So the head and shoulders pattern tries to predict a bull to bear market. So the bull to bear market basically means at one time the price is showing a momentum upwards, then after that it's showing a momentum downwards. This is characterized by a large peak with two smaller peaks either side. So if you look at the screen there, the white line indicates the peaks. In the center one is the larger peak. On the left of that and the right of that are the two smaller peaks indicated by the white line. All three levels fall back to the same support level, so that support level is indicated by the yellow line, which is almost horizontal, but it's actually from left to right going slightly downwards. So please try and identify that as best you can by drawing that line. If it is not quite horizontal and it's going from left to right downwards, then that is an indicator of possibly using a stop loss or cashing out from this stock. So that trend is likely to be a breakout in the downwards motion. So if we can see on the right hand side of the illustration there, with the red dotted line, it gives you an indication of a possible area to use for a stop loss, because around about that level there is going to be potentially a breakout, but the breakout will be downwards. So if you look at the illustration again, you can see the blue arrow in the middle top part of the screen. That represents the maximum price for that return. So in terms of maximum return, if you sell out at the top of there, then that would be the ideal time to sell out. However, the full pattern does not emerge until after that, so that's why you can't identify the head and shoulders just at the blue double arrow line. Once you get to the full head and shoulders, you know what this indicates, and then at the bottom you can see the price projection in terms of the height of the double blue arrowed line at the bottom is equal to the double blue arrow line at the top, just below the head and shoulders. So that at the top one represents the increase in your return on your share price. The bottom indicates the loss that you would get if you do not use your stop loss. So the stop loss will protect you from that loss, because obviously that is now a bearish pattern. So I hope that helps. Thank you very much for watching. Please stay tuned.